Some huge moves today in the growth area of the market. The question that needs to be asked is it time to start buying the names that have been beat to shit over the last 6 months?
Could have been on Wall Street. Should have been on a ball team. Could give a fuck about y'all team, cause I don't really feel none of y'all. Morphine, Wall Street.
What's up, guys? We're going to be going over some growth opportunities. It feels like it's been forever since we've talked about owning growth to the long side. They have been beat to shit over the last 9 months, 6 months in some names, and now it looks like the market is starting to pivot and starting to find a floor here in a lot of these names that have depreciated upwards of 60, 70, and even 80%. Some names we'll go over in the future. As always, we're going to start off with Koifin here, and we're going to deep dive some of the sectors, specifically tech and consumer discretionary. On this year-to-date chart, you can see we are still firmly below SPY, but listen, when you're buying and looking to buy sectors and industries that have been in such big downtrends, obviously, they're going to be down on the year-to-date chart. What we want to focus on is there a change of trend? Have we stopped placing lower lows and lower highs? And it looks like for the time being, starting about 2 weeks ago, XLK being your tech sector, XLY being your consumer discretionary sector, and XLC, your communication sector, are all starting to print higher highs on the year to date. Now we want to confirm this on the 5-day just to make sure. And here we go. Over the last 5 days, consumer discretionary, tech, and communications have outbeat the rest of the market. This is huge because value has been beating the market hands down over the last 3 to 4 months, and now growth is starting to show a resurgence. Now, obviously, we want to niche down which sectors in particular are showing the greatest relative strength. Let's pull it back up on year to date. The sectors that we want to focus on in today's video are FDN, IGV, SMH, PBW, and TAN. Those are the 4 or 5 names that are really in focus for us since we're deep diving the growth industries right now. FDN is an ETF filled with internet names. IGV is going to be software related names, okay? SMH, wherever it is here, is your semiconductor ETF. All of the semiconductors, AMD, NVIDIA, etc. PBW is your clean energy, and TAN is your solar. And as you can see, let's actually just get rid of all of the noise here and let's focus on just the growth names. We'll click on solar. We'll click on software. We'll click on clean energy. We'll click on semiconductors. And then where's the last one here? Internet. We want to focus. Is there an upwards trend forming on the majority of these industries? And I'm going to go ahead and go out on a limb here and say, yes, it appears that on the year-to-date chart, there might be the beginnings of an early trend reversal. And remember, specifically if you're in the trading initiative, our job as traders is to identify and position ourselves as early as possible into a trend, therefore hitting maximum amount of profit. We're going to niche down one more time. Look at the 5-day. Once again, all 5 of these growth industries are up on the 5-day over SPY. TAN, SMH, IGV, FDN, and PBW. So we're going to start with QQQ. This is your major growth ETF, NASDAQ, right? We want to start looking if the downtrend is in fact over. If we look peak to trough here, we'll start at the end of December and come down towards the middle of March here. We had a 21% drawdown. That is bear market territory. This is a legitimate downtrend, right? We're hitting a series of lower lows, lower lows, lower lows, and once again a lower low and lower high, lower high, lower high, lower high. This is a downtrend. I don't care how you want to paint it. 22% to the downside, characterized by lower lows, lower highs. There's no easier way to discern an uptrend from a downtrend than this fractal right here. It is plain as day. But where people make money, the most money, when they're quote unquote buying the dip as traders, not long-term investors, is being able to time a bottom. And what I'm going to ask you is this a double bottom here at this 318 level? We did not take this inside TTI because we do not try to time bottoms, but now we are interested. Not only are we above this 33676 pivot, inside TTI, we go below this, we want a short growth, right? Above this, we want to be long biased. So we are looking to go long in QQQ. We have been for about a week now, and we are finally breaking our first higher high. Ladies and gentlemen, the downtrend in the Qs from a technical standpoint is over on the daily. There's no other way to paint it. Now, I'm not saying that this can't continue to the downside. Absolutely it can. But what I'm saying is risk is now against the shorts, right? We're starting to print higher highs in price. This is classic double bottom territory. And because we broke and closed above this previous bounce high, right? This should have been resistance and we just steamrolled right through it at around 350 today. We are now in uptrend territory. One thing I want to point out, RVOL, relative volume, a little bit lighter on the day, but still high volume if you look at the past few months, and we are above the 50 RSI. Guys, it's time to start looking to go long growth. There's no other way to put it, right? We want to start looking. So let's look at the tech sector first. Tech ETF XLK. Once again, you're going to notice a lot of the levels are going to look the same, and so is the price action. So this is XLK, your tech ETF. It's going to hold names like Apple, Microsoft, etc. Once again, classic downtrend characterized by lower lows, lower highs. The bounces are going to continually show lower price action over time until we formed the same sort of double bottom at around 142. And once again, we just printed the first higher high. This is Microsoft. This is Apple. These are big tech names. ETF is now showing its first real bounce off of the double bottom at around 141, 142, and clearing the previous high at 155. RSI is above 50. We are looking to go long XLK related names. Deep dive that ETF if you don't know any of those names. I'm not going to do it for you, all right? You got to do something. XLY, Consumer Discretionary. Once again, we're not going to go through the downtrend. We broke the previous high. Double bottom territory is there. Biggest name in XLY, Amazon and Tesla. Those are the two giants, right? Would have had two great days, a few days in a row, Amazon and Tesla. XLY absolutely beasting, breaking above that 178 to 180 area. This is a bona fide uptrend. And if you think about it, if you go back like 2 weeks, I was calling for a potential breakdown in Amazon. We never got it. We didn't go short. So we absolutely saved ourselves from entering a bad position in Amazon. And here we are, once again, XLY creating a higher high, showing an opportunity to potentially go long in Amazon. There's a trick for you. I've been in the industry for 13 years. Your bias needs to shift if your thesis was wrong. There's nothing wrong with being wrong. You just cannot be wrong for long, okay? So let's actually dive into some of the industry ETFs here. IGV being your software ETF. Are we printing the same sort of action on IGV as we were with XLK? Well, we're almost there. We're sitting right here at the previous bounce high. This is the resistance area. We are peaking our nose above the 50 RSI. Therefore, we are looking to go long in the trading initiative. And as soon as we close above this level, boom, party's on. IGV. Software names are right there. I'm not saying it's going to happen tomorrow. We have generally a 4 to 6, 4 to 8 week time horizon when we're looking for trades within TTI. If you're a day trader, this is great opportunity for you to potentially shift your daily bias to the long side. This is not just going to be a straight shot up, right? But the trend looks like it's starting to change in software names. Next ETF on the industry side is going to be FDN, your internet index, right? So these are going to be names that are tech related that are found on the internet, not necessarily software related names. And so one thing I want to point out that I actually had a note here was that RVOL is a little bit lighter on the internet names. Once again, deep dive this ETF. This did get beat down a hell of a lot more than IGV. This was actually, don't quote me on this, but I'm pretty sure off the top of my head, this was one of the worst performing industries over the last 4 months. And therefore, we should see one of the bigger bounces off of the floor, right? We didn't even hit a double bottom. We actually broke down below. Every other ETF we've looked at so far has had a double bottom. FDN did not, okay? So some of these names might be a little bit weaker than some of the other software and other growth-related names. But once again, we're right there flirting with a higher high. RSI is above the 50. If we clear this level at around 190, 189, we got to start looking to go long FDN-related names, internet-related names. The last ETF I want to go through is PBW. This one's fun. Left a couple notes here for the guys in our group. We're above the 50 RSI. First off, it's not an easy ETF to trade. If you've traded clean energy, I'm talking Blink, I'm talking ChargePoint, Sunrun, SunW, all of these names, they're not easy. They're chop city, right? We've had a prolonged markdown period over the last like 5 months. It felt like eternity. If we look peak to trough here, going back all the way at the beginning of 2021 down to where we are, this massive ETF ran off 64%. That is huge for an industry ETF to just give up all of that profit, right? But we are starting to set a series of higher highs, right? So we had a prolonged markdown period. This is an accumulation zone. If you're in TTI, you know all about this. If you're not, we generally want to see a change of direction in a trend followed by a horizontal channel, and also the emergence of high buy days, right? An accumulation. Who is buying PBW at this level? Somebody is. We don't care who, but somebody is, and that is a clue for us to start looking to go long. We saw the strength on the industry ETF within Koifin. We had a horizontal level here at 60. If I actually go ahead and get rid of some of these brush strokes, you're going to be able to see it. There is our horizontal level. We wanted to go long if we broke above 60, as long as RSI was above 50, and we went long PBW on this breakout. Now, once again, I just had it posted. We are starting to set a series of higher highs. This is classic uptrend territory. There's nothing to say PBW can't come back down for a few days before continuing on up. There's actually nothing to say PBW can't just rock bottom again. But the risk right now is against going short PBW, all right? That is where you want to be trading. With the trend, this is an uptrend. I don't care who you're asking. If you're a technical trader, higher highs, higher lows are indicative of an uptrend. So start buying the things that are performing well within PBW if you want some exposure in an uptrend with clean energy. So 3 names that we took as a group. I just want to show you guys some examples of what we were looking at within the growth sphere. Twitter, okay? So Twitter has just been beat to shit. Just absolutely one of the worst performing names over the last 9 months, 8 months. 57% drawdown here from peak to trough starting in July of 2021. That is massive. Think about how many users Twitter has and its failure to monetize and blah, blah, blah. The market hated it. But we had a change of direction. It really can be this easy sometimes, guys. When we recognize that there's strength flowing back into sectors and industries, let's start looking at what's showing a change of sentiment. And we can start by looking at the change of direction here. Just a basic diagonal trend line to the downside with a rounded bottom, right? What does a rounded bottom tell you? Well, if you're in TTI, you know that that is an accumulation pattern. We were just talking about it with PBW. Twitter did not want to break any lower than what it had been. It changed its slope, its trajectory, and we're starting to get the emergence of high buy days, right? So where is a likely opportunity for us to buy in as a group? The very time it breaks that slope, that trend line, right? And so we bought this breakout, and we are currently up in Twitter. Now, once again, we're above the 50 RSI, which means odds are on our side. This is going to continue. There's nothing to say that it can't just drop. It's a game of probabilities. That's all trading is, but we're stacking probabilities on our side. We are buying the change of direction and trend. We are noticing that somebody down here really likes Twitter, and there is buying interest. Risk is against shorts, and probabilities are with going long in Twitter. We are long Twitter. We are focusing on this $42 area for calls. Some of us bought spreads. I believe, don't take my word for it, IV is above 50 for most of these plays that we took with Twitter. So generally above 50 IV, we look to spread it to mitigate some of that IV crush. But once again, since we're looking 4 to 8 weeks out on these, who's to say 42 is the limit, man? We can go all the way up to 47, and realistically, if we're buying the 42 calls or something, or if we're looking for spreads, we can target a bunch of different stuff here, but we're looking for Twitter to make a pretty decent move over the next 4 to 8 weeks, assuming the sectors and industries within growth still see inflows of funds. 2 more names really quick, and then I'll let you guys go. Hood, this is something we normally would never trade in TTI. This is not a setup that we necessarily love to find. Being down 88, 89% from peak to trough since it IPO'd is absolutely insane to me. It's just not something that I normally want to buy, but it caught our eye. Why? Because a prolonged markdown period, right? Followed by an accumulation zone. And let me go ahead and zoom in here so you can see exactly what I'm talking about. Now, if you subscribe to fractals, to chart patterns, this could be a symmetrical triangle or whatever else you want to call it. But realistically, we have a series of lower highs and a series of higher lows. That gives us an apex point to potentially buy the breakout or the breakdown. And in Robinhood's case, for example, we broke to the upside. What did we do? We bought Robinhood. right? We bought hood. This is something we normally wouldn't do, but we did. RSI is above the 50. And once again, we see these periodic big buys in the accumulation area of this symmetrical triangle. That is indicative of a big buyer coming in, wanting this not to break below, I believe it's $10. Let me double check there. It's around 10 bucks. You can see if we delete some of these brush strokes here, that every single time hood gets down towards 10 bucks, we get a big buyer coming in, scooping up shares, and it does not want it to drop below $10. Use that. That is a clue. We have a change of direction. We have a risk on, risk off level because of this triangle that formed. We are targeting the top of the triangle near 18 bucks. But hey, sky's the limit on something like hood. We have absolutely no idea how high this thing can go. It's beat to shit. But right now, risk is against shorts as long as money's flowing into the sector and into the industry. We have a clear breakout, a clear change of direction, RSI above 50. TTI is long Robinhood. And you know what? If it doesn't work out, it's one of the cheapest plays I think we've taken in our group in forever. If you can't part ways with like an $80 position or something like that, options probably aren't for you anyway. But this is worth a little bit of a throw in right now, because if this does pop off to 18, even for the guys that grab shares off of our original entry at around 1250, that is still a 40 to 50% move. That is huge for an equities trader, and I know some of you guys have bigger positions. So last name I want to go over, we're just talking about hood not being something we buy. How about CD? China Data. This is a Chinese IT name. Now listen, if you're in TTI, you know we have not bought a Chinese name in over a year. I mean, as a matter of fact, we shorted Chinese names for the majority of last year. Baba, Billy, PDD, you name it, Queb. We were trying to short it. We knew that Chinese names were just not there to own yet, and risk was against going long, so let's take the easier trade and short the pops. What about CD? If you've noticed anything about the last three names here, Twitter and Hood, we're looking at change of direction. What is the sentiment telling us here in CD? Well, we had a slope, very easily drawn by a descending trend line breakout. There it is. Now, one thing I do want to point out with CD is that this big day right here, all Chinese stocks, essentially any Chinese stock that is held in a Chinese ETF, got an incredible inflow of cash, and thus everything got bought up. Right? Every single thing changed their direction. BABA was up like 30% in a day. PDD was up like 80% over 2 days. It was insane, right? So if you got caught short, hopefully it was a minor loss because you were managing it. If you were long off that somehow, congratulations, you just won the goddamn lotto. But CD, on the other hand, it's a small cap. Actually, it's a micro cap. Not a lot of options availability, if any. We took shares on this. We were looking to buy the breakout near, I believe it was 630. I might be a couple cents off, but it's somewhere around that 630 area. It's a change of direction. It's above the 50 RSI. And once again, we are just looking for CD to fill this gap up near 850, 860. It doesn't seem like a very big trade, right? If you look at this entire massive chart, but I want to point out something. If you look at the 630-ish entry, and like I said, I might be a couple cents off, so my bad if I am. That gap fill is a 38% move to the upside. That is huge for an equities trader with any amount of size. And there is inflow coming into CD because Chinese names are starting to get some inflow. Also, this is not acting the exact same as all Chinese stocks because we have had 2 pullback days in between Chinese stocks pumping. CD has not pulled back yet. Now that I think of it, this is a micro cap. I believe it's in between 50 and 70 million market cap. So one big buyer can't come in and just drop this thing, which is why if you're in TTI, cover your entries with a stop. Do not risk this. Do not take this as a loss. We are currently up on this double digits. I believe somewhere around 10 to 20, depending on where your exact position was. But this is another cool name that we would not normally buy in TTI after a huge downtrend, but this is what you got to start doing if you're looking at entering positions that have been beat to shit anywhere between 50 and 80%, specifically in the growth area. Look for changes of downtrends with accumulation areas and zone in on those, find your risk on, risk off levels, and buy the shit out of those. Guys, if you like this type of comment, please like the video, subscribe, and comment below on things you want me to talk about. And if you want to trade with us live Monday through Friday, starting at 8:45 in the morning, as well as share in with the trade ideas and sit with us while we deep dive ETFs, sectors, industries, individual companies looking for those trade ideas, we do offer a private Discord. Link is in the bio. You don't have to join if you don't want to, but if you want to take your trading to the next level and you like this content, I say come chill with us.